What is up, traders, and welcome back to my channel. My name is Pablo Espinal, and today we're diving deep into the world of price action trading. I'm about to reveal 20 secrets that Wall Street doesn't want our traders to know. These are the techniques the pros use to stay ahead of the game. If you like this type of content, don't forget to like, subscribe, and leave a comment as I post about 3 times a week on a regular. Alright, let's do this. First up, let's talk about inside bars. These little beauties are like the calm before the storm in the market. You want to look for them after strong moves because they signal a pause in the action. Here's the key. Trade the breakout of the inside bar, but make sure to set your stop loss just outside of it. For an extra edge, combine this with the RSI to confirm overbought or oversold zones. And if you spot an inside bar near support or resistance, that's when you've got a really strong setup on your hands. Pro tip, use smaller time frames like 5 or 15-minute charts to catch those early entries. Now, let's move on to pin bars. These are your early warning signs of a potential market collapse. You're looking for candles with long wicks and small bodies. That's your classic pin bar. They're especially powerful near trend lines for reversals. But here's the catch. Always confirm with the volume spikes before you enter. Low volume pin bars, those are traps, so steer clear. Keep an eye out for pin bars around news releases. That's where you'll find the biggest moves. Engulfing candles are next on our list. These are like the market's loudest reversal signals. Watch for bullish, engulfing candles at bottoms and bearish ones at tops. But remember, big moves need big money, so always check the volume. This pattern works best on daily or 4-hour charts. For extra confirmation, try combining it with trend lines. Now let's talk about trend line breakouts. These can give your trades some serious escape velocity. Draw clean trend lines with at least 3 touches and look for breakouts with volume spikes. But be careful of breakout traps. Always check multiple time frames. Place your entry slightly above or below the breakout and consider adding momentum indicators like MACD or RSI for extra confirmation. Consolidation patterns are like market pressure cookers. Keep an eye out for rectangles, triangles, and flags. Watch for volume to build up during the consolidation phase. Use breakout candles as your entry signals, but set tight stops just outside the pattern. And always try to align these with higher time frame trends for the best results. Double bottoms are hidden profit zones that many traders miss. You're looking for 2 equal lows on the chart. Enter after the second low confirms, and watch for rising volume on the second bounce. Use the neckline break as your trigger. These work great on 1-hour and 4-hour charts. The head and shoulders pattern is a window into market psychology. Identify the left shoulder, head, and right shoulder. Watch for neckline breakouts, but always use volume confirmation to validate the pattern. Avoid early entries. Wait for the full formation. This one works best on daily and weekly charts. Alright, next, let's talk about flags and pennants. Flags and pennants are signs of hidden market energy. Look for flags after sharp moves and pennants after explosive news. Always trade in the direction of the flagpole. Try combining these with MACD or stochastics and confirm with a volume spike on the breakout. Volume is the market's true voice. Watch for rising volume with big candles, but avoid trading during low volume chop. Always use volume to confirm or deny breakouts. Unbalanced volume, or OBV, can give you some extra insight here. Next, let's talk about wicks. Wicks are the clues hidden in fear and greed. A long top wick means buyers failed. Greed got punished. A long bottom wick, sellers failed, and fear got reversed. Use wick rejections near key zones to time your trades. Tall wicks with small bodies often signal possible reversals. Combine this with support and resistance levels to confirm danger zones. Now let's talk about fakeouts. Wall Street's most vicious trap. Always confirm breakouts with volume, or you're toast. Wait for price to retest after a breakout, and use multiple timeframes to avoid misreads. Look for pin bars or doji candles after fakeouts, and stay away from those news hour volatility traps. Chop zones are the silent killer of trading accounts. Avoid trading sideways markets. Wait for clear trends. Mark chop zones on your charts to dodge danger. Use ADX to confirm trend strength. And watch for overlapping candles that signal no momentum. Only trade when price breaks and holds outside the zone. Multiple timeframes are your secret weapon against Wall Street. Use the daily chart to find the big trend. Then zoom in to 1 hour or 4 hour for entry confirmation. Never ever enter against the higher timeframe trend. Try to align support and resistance levels across timeframes. Remember, zoom in after zooming out. Liquidity grabs are how Wall Street steals your trends. Watch for sudden spikes near stop loss areas. Don't place your stops too close. Wall Street is hunting for them. Enter after the grab when the real move begins. Look for fake breakouts near highs and lows, and study historical price spikes for clues. Spotting institutional footprints is crucial. Watch for big volume spikes out of nowhere and look for stop run patterns. Those sudden fakeouts. Track price stalling before big news events. If you have access to level 2 data, use it to see who's really moving the market. Remember, institutions always leave tracks. You just need to learn how to spot them. Understanding market structure is like seeing the skeleton of every price move. Identify higher highs and higher lows for an uptrend, and lower highs and lower lows for a downtrend. Mark structure breaks. This is where the trends shift. Avoid trading against the current structure and always confirm reversals with at least 2 structure shifts. Psychological levels are Wall Street's magic numbers. Watch whole numbers like 30,000 on the Dow. Mark 00 and 50 levels. They tend to be sticky. Use these levels for stop loss and take profit zones. Combine them with patterns for high probability setups. See if price stalls or reverses at these zones. Risk management is your bulletproof vest in trading. Never risk more than 1 or 2% per trade. Use a stop loss every time, no exceptions. Always calculate your reward to risk ratio before entering a trade. Don't revenge trade. If you lose, reset and start fresh. Keep a journal of every trade to to spot your mistakes and improve. Finally, let's talk about the winning mindset. This is your greatest trading tool. Don't fear losses. Treat them as tuition for your trading education. Stay calm in chaos. The market feeds on emotions. Stick to your plan, even when you're scared. Celebrate your process, not just your profits. And always, always visualize success before every trading session. Well, that's it for this video. These are 20 price action secrets that can take your trading to the next level. Remember, success in trading comes from consistent practice and continuous learning. Don't forget to like, subscribe, and leave a comment. Thank you for watching, and I'll see you on the next one.